XRP is going to be gone from platforms very soon, and most people won't even notice. This is not uncertain. The setup that is being made right now is the same kind of setup that has caused huge supply shocks before. The kind of events where the price changes in a way that most regular buyers never thought was possible. In fact, the next few months are going to be historic for crypto, and how you position yourself today will determine if you look back wishing you had acted sooner, or if you are one of the few who were ready and took advantage of the life-changing opportunities when the shock hit. I'm not telling you what to do with your money. We need to look at cash flows to see how this works. At this moment, a lot more money is being spent on technology and software investments. This is not random. It is a clear sign of where the U.S. economy's new wealth is going. Now, this is the very important part. The beginning of the 1999 dot-com bubble looks a lot like what we're seeing today. At that time, businesses spent a lot on new technologies, which led to huge market growth. But when it went too far, the bubble burst, and 80% of buyers lost everything because they didn't know when to sell. Today, we see that same growth rate, but now it's directly related to how people are using blockchain, how companies are using tokens, and how businesses are working with banks. This means that crypto is no longer just a minor investment like it was a few years ago. Now it's at the heart of this new capital cycle. XRP is in the right place because it's one of the few tokens that can be used on systems that are ISO standardized, tied to banks, and have liquidity corridors. Here's what most people get wrong. They think that the increase in the price of cryptocurrency is based on speculation. That's not the case for XRP. Its price is directly affected by supply shocks that happen when cash comes in faster than exchanges can deal with. We've seen this same thing happen before. XRP went through an extreme shock in November with 51 billion in trade volume over 24 hours. XRP went from 0.47 to 3.45 in no time at all because of that one surge in demand. That wasn't just random talk. There were too few tokens for the amount of money that wanted to buy them. The price had to rise quickly and sharply, and that's all there was to it. Now, let's look at how these points relate to the present. Right now, XRP is worth about 2.78. Its market cap is between $165 and $167 billion. For a mild supply shock, we'd need the amount of trade from one day to be about $10 to $15 billion. That would be enough to raise the price by 10% to 20%. For a big shock, you'd need between $15 and $25 billion, which would increase the price by 20% to 50%. But for a huge shock, one that would change all the predictions and be reported on globally, we'd need $25 to $50 billion worth of trades every day. That's the price point that has in the past caused XRP to skyrocket to several times higher within days. Now, things are going to get really exciting. The factors that led to the shock in November are beginning to come together again, but now with even more energy. Technology companies are putting more money than ever into blockchain infrastructure, making stronger connections between standard tech and crypto. Now that big companies like BlackRock and Vanish are using ETFs, major treasuries, and RWA tokenization, acceptance on a large scale is happening. Any one of these things would be a big deal by itself. Put together, they make a snowball effect that could easily lead to a perfect storm of demand. And unlike last November, this is not just retail FOMO. It is systemic acceptance at the banking and institutional level. When there isn't any supply left, the price doesn't just rise slowly, it jumps up sharply. And this is the important part. This isn't something that's going to happen far off in the future. The liquidity setup, the rate cycle, and the institutional ramps are all coming together as we approach the end of the year. For that reason, I think that if we see XRP amounts of more than $50 billion in a single day, the price could really go up into the double-digit range, maybe even over $10 per coin. And this isn't just a theory. Grok's models show that when there are not enough goods available and a lot of people want them, prices can keep going up without limit. It's being set up right now for XRP to do exactly what it was meant to do: bridge global liquidity, no matter if it's ISO integration, banking rails, or direct settlement use cases. This is why you need to make sure you're in the right place before the supply shock happens. If you wait until after, you'll be the one buying at $8, $10, or $12 per coin. People who understood how it worked were able to buy earlier. The market always punishes people who are too scared to make a move. In 2017, with only a few billion in daily trade, XRP went from 0.23 to 3.36. Consider it. A move of 14 times the size was possible with just a few billion. Now, if you do that with numbers for more than $50 billion, it's clear why, and this is just the first step. Because when the first wave of liquidity hits the system, it causes media coverage, institutional chase, and retail fear buying, which all make the move worse. That's when it really starts to go parabolic. Once you know the details of how these supply shocks work, you can begin to understand why so many people don't notice them at all. They think that prices will go up slowly, in steps, but that's not how markets work. They have rapid, violent bursts of movement when there is high demand but not enough supply. XRP is one of the cryptocurrencies most sensitive to these events. XRP is a fixed supply asset with big portions locked up in escrow, so it is different from Bitcoin and Ethereum, which have miners and stakers that make new supply available to the market all the time. This means that when a lot of people want to buy tokens, markets can actually run out of them. And the only way to meet that demand is by raising the prices over and over. This is the reason why history repeats itself. If you look at all the big XRP runs, 2017, 2021, and the spike in November that we talked about earlier, you'll see the same thing happening every time. Little cash flow, a lot of trading all of a sudden, exponential price changes. It's not random, it's a structural trait of the asset itself. And at this moment, the market is beginning to look a lot like it did before those big price increases. But here's what makes this cycle different. A lot of people are using it. In 2017, the most important thing about XRP was that people were talking about it possibly working with banks. In 2021, people were arguing about what the rules meant. Today, it is fully integrated into the backbone of the world financial system. Now, it's not just about relationships, it's about ISO standard messaging systems, real-world settlement layers, tokenized assets worth trillions, and ETFs that give institutional money a way to get in that is controlled. The multiplier effect is a societal layer. Just the act of selling can raise the price by a lot. But when you add organizations that can send tens of billions of dollars in one go, the possibilities are much bigger than anything we've seen before. This is why experts keep saying that in the near future, it is reasonable to expect prices will be at least 10% higher. Not because of crazy guesses, but because the math works out when you look at the cash flows. Let's go through a simple example. Think about how XRP would look at 2.78 with a market cap of $166 billion. Now think about how the amount of trade done every day would suddenly increase to $30 billion for at least 2 or 3 days. That's enough to cause a supply shortage so bad that exchanges begin to change the prices of goods at much higher than the current market price. When traders try to get higher, computers follow and businesses join in. All of a sudden, the price is twice or 3 times as high in a very short amount of time. This is exactly what you need to do to get $8, $10, or even $12 XRP right away without having to wait for years. It's not about slowly getting used to it, it's about suddenly having a lot of money available. And now for the truth. Most of the people who buy and sell stocks don't want to hear this. Just like always, 90% of them will miss it. During the last crypto bull run, 95% of people who put money into it ended up losing money. In what way? Because they sold before they should have, bought after they should have, or got scared during price changes. That's what happens when you don't know how it works. A supply shock feels like it shouldn't happen. When people see the price triple in just 1 week, they think it has to go back down. But with XRP, supply shocks don't just go back right away. They often come together at higher levels, which traps people who sold. Then they build the next leg up. That's how these markets move money. Another important thing to notice is how this is directly connected to macroeconomic situations. Rate cuts, for example, aren't only about the stock market. They are very powerful for crypto, like jet fuel. The economy has more liquidity when rates are lower, and when there is money looking for yield, it goes into high-risk investments like crypto. Add that to the fact that companies are spending more money than ever on blockchain and digital infrastructure, and you have a self-reinforcing loop. More liquidity leads to higher valuations, which brings in more investment that drives greater adoption. Because XRP can be used to quickly send money across countries, it is at the very center of that cycle. It is very important to understand that institutional interest is another layer. ETFs are more than just an offering. They are controlled on-ramps that let big asset managers, insurance companies, and pension funds put money straight into crypto markets. When those flows start, they don't come in slowly, they come in quickly. When that money is focused on an asset with a fixed supply like XRP, there isn't just a price rally. There is a full change in the price of the asset. Now let's look at the psychological loop that always happens. You first have doubt. XRP moves sideways, people get bored, and the focus changes to other things. Then you get the first shock of loudness. When the price doubles or triples, all of a sudden there are news stories about it. That's when it feels like the early believers were right, but a lot of retail buyers still don't take part and say to themselves that it's too late. Then the second shock comes, and that's when the media goes crazy. Institutions join in, and FOMO, fear of missing out, goes through the roof. The biggest gains will already be gone by the time retail finally gets in on a large scale. Right now, we are in the stage of doubt. A lot of people don't realize what's about to happen because the price has been rising slowly without any major changes. But if you look deeper, the conditions for liquidity, the institutional infrastructure, and the measures for adoption are all coming into alignment. That's why most people won't see the shock coming. And when it happens, it won't happen slowly. It will cause an explosion. How supply mechanics work on swaps is another thing we should discuss. Just a small part of the total supply of XRP is offered on liquid exchanges. Since a lot of it is held by long-term holders or locked in escrow, the real float that can be traded every day is very small compared to the possible demand. This is why even small increases in daily volume can cause big changes in price. Moving XRP doesn't require trillions, just tens of billions in focused bursts will do. That's only a small part of the dry powder that institutions have control over at all times. Then there is the spread effect. When XRP moves, it not only attracts more buyers, but also pulls cash from the entire crypto market. Traders move their money from assets that don't go up in price much to ones that do so quickly. Volatility is detected by algorithms and amplified with debt. This is how a single-day move turns into a vertical run that lasts for a week. It's the wealth network effect, and when there's a lot of trading activity, XRP has proven over and over that it's one of the best at getting the whole market to move. Historical timing is one of the most ignored signs in all of this. Cryptocurrency doesn't randomly move from one day to the next. There are times when liquidity is at its highest. Historically, one of those windows has been late fourth quarter to early first quarter. The dates of 2017, 2021, and the November shock were all the same. We're about to enter the same season, and the rate cycle and liquidity inputs are the same this time. There are also more institutions involved. That's not an accident, it's a setup. Here's what it means in simpler words. It wouldn't take much for the price of XRP to move up 5 or 10 times. It just needs the same factors that have been shown to cause exponential price changes in the past. And those factors are not just theories. They are happening now, right in front of us. In other words, the spark is burning already. All we need is the spark that will start a chain reaction. And history shows that it won't take long to get going. The prices will change quickly and violently, and most of the markets will have to rush to keep up. This is why it is very important to know what is coming. You won't have time to react if you think you will. The move will already be in progress by the time you read the news and your friends text you about XRP. That's how these markets are set up to work. They honor planning, not reacting. And this is the important part. The way things are set up now, there isn't just one shock, there are many. It is likely that liquidity will come in waves. The first shock changes the price of XRP to a double-digit number. After that, there is stability, then another wave from institutions, and finally another wave from retail FOMO. Each shock adds to the previous one, making a stair-step pattern upward. For this reason, experts are looking beyond just $10 and discussing $20, $30, or even more during this cycle. Not all at once, but in steps as the use of the technology grows. The math and the structure both back it, and so does history. Most buyers don't have the patience to wait through volatility or the discipline to see the setup before it is clear. And today we are right in the middle of that setup. XRP acts differently from most of the crypto market, and if you look at liquidity cycles, institutional usage, and exchange supply mechanics, you'll see why. Bitcoin gets a lot of media attention, and Ethereum is popular with developers, but XRP has one important feature that makes it different. It has always been meant to be used as a settlement asset. In other words, XRP is different because its worth is based on how much money is coming into and out of the global financial system. Most tokens need a lot of speculation or development in their ecosystems to change their prices. Look at it this way. Whenever a bank, a payment provider, or an organization adds XRP to its settlement stack, it is creating demand for it structurally. People aren't just talking about it, they're using it all the time. And when you add that to the fact that the moving exchange supply is thin and concentrated, you can see how quickly demand can cause extreme shocks. Speculative cycles fade when the hype dies down, but XRP is linked to real-world liquidity routes that are growing more and more over time. Let's look at the reasons this cycle is so different from earlier ones. XRP went from less than 25 cents to more than $3 in just a few months in 2017. It wasn't deep institutional acceptance that drove the factor. It was speculation on the possibility of XRP and potential partnerships. Just the thought of it was enough to cause one of the biggest percentage changes in the history of crypto. XRP was strong again in 2021, but it was held back by ongoing legal issues. Because of the lack of clarity, investors were unsure and banks mostly stayed out of it. Even with those strong winds blowing against it, XRP still had several powerful bursts. But now in this cycle, the situation has changed totally. The rules are becoming clearer. Not only are organizations interested, but they're also starting to build. Tokenization of real-world assets is now a fact, not just an idea. BlackRock, Vanish, and other fund managers are currently testing it. Payment systems that follow ISO standards are working together in more countries. And maybe most importantly, the global cash cycle is changing in a way that has in the past led to huge increases in the value of cryptocurrencies. This is why so many experts think that the supply shocks in this cycle will be even more severe than those of 2017 and 2021. Because this time, it's not just individual investors rushing in. It is institutions with billions of dollars, banks that need real settlements, and ETFs that are making regulatory compliant routes for mass acceptance. Demand of that size doesn't just cause rises, it changes the whole system for how XRP is valued. To help us understand that better, let's look at the numbers again. With a $166 billion market cap and a price of $2.78 per coin, XRP is easily among the top digital assets. But think about what happens when the daily amount does $50 billion or more like it has in the past. There isn't much exchange stock, so prices could drop to the $10 to $15 range in just a few days. From there, it could easily go up to 20, 30, or even more as the system starts to use it more widely. People who don't believe this will say that these numbers sound too big, but the truth is that when there are supply shocks, markets always go too far. Until it did, everyone thought XRP couldn't reach $3 in 2017. Before it happened, everyone thought that $51 billion was an impossible amount until it was reached in November. That's how exponential growth works. They always seem impossible at first, but once they're over, everyone can see it was clear what would happen. This brings us to another important thing: the psychology of denial. A lot of buyers are ignoring XRP right now because it still hasn't made a move. They are chasing assets that have already pumped and don't realize that XRP is slowly building the exact conditions for its next breakout. But that's just how these systems are designed to work. By the time the XRP gets attention in stores again, the move will have already started. And at that point, most people will have to buy at much higher prices, which will cause the rise to grow even more. It's also important to understand how leverage makes these events worse. When XRP starts to move, traders rush in with leveraged bets, which speeds up the upside. With limited quantity, exchanges raise prices, and the feedback loop starts. But the same leverage that increases the potential for big gains also wipes out traders who don't follow rules when the market is volatile. That's why most of the regular investors in previous cycles lost money even though prices were rising. They were late on entries, panicked when the market dropped, and used too much leverage at the wrong times. That's why the people who win every time aren't the ones who are always on the move. They are the ones who understood how things were going to be and got into position early. Being ready is always better than having to do something when it happens. Now let's look at the world economy as a whole instead of just focusing on crypto. There is a huge change in how money travels across countries that only happens once in a generation. Digital currencies are being tested by central banks. Businesses are giving things that could not be easily bought or sold a digital token. Payment rails are being rebuilt with blockchain at the center. All of these changes show that blockchain will not be just an alternative system in the future. It's the system that does it. And in the middle of that, you need a neutral bridge asset, one that can be done quickly and cheaply and scaled up. XRP is one of the very few assets that already meets that standard, because it has been tested for years and used in real life by institutions. This is why this cycle feels different. It's not about guessing what XRP might be able to do. It's about knowing what XRP is already capable of and how quickly it can grow when there are no limits on the amount of money that can be exchanged. Most investors' main question isn't whether XRP can be moved. History has shown that it can. The important thing is whether you'll be in the right place before the next shock, or if you'll wait until it's already happening. Because when the move starts, there isn't much time left. Here's another thing to think about. In crypto, every big parabolic trend has been followed by periods of consolidation at much higher levels. To put it another way, the floor will always be raised. XRP's floor price went up from just a few cents to 10 cents in 2017. The floor price more than doubled in 2021, rising from less than 30 cents to more than $1. This time, after the next wave of shocks, the new floor might be in the $10 area. That's how adoption has a multiplying effect. It doesn't only make short-term pumps. It sets new standards from which future rounds will start. Now think about what will happen when global organizations see XRP as infrastructure instead of a speculative product. When its systems are used every day to move billions of dollars in tokenized assets, when banks make it a normal way to settle payments, at that time, we aren't discussing XRP 10, 20, or 30 anymore. We are talking about estimates that show the value of goods or services that can be bought with trillions of dollars in money that has already changed hands in the real world. That's not what hype is. That's where systemic acceptance logically leads. Also, keep in mind that the markets always take the future into account. Once people can really see that usage has happened, XRP will have already been given a new price based on that fact. This is why the next 12 to 24 months are so important. They show the period when adoption is quickly growing in the background, but the market is still not completely in sync. The people who have made the most money from investing have never been the ones looking for publicity. They were the ones who noticed major changes early on and adjusted their positions properly. At this moment, that's the chance that XRP stands for. Finally, we're right at the point where a supply shock is about to happen, and it's going to be unlike anything that has ever happened before in crypto.